right, welcome everyone. My mic is almost falling down again. I need to get my mic stand fixed. This is not working. Maybe you could say a couple of words, Dirk, before I adjust this.
Hey guys, how are you doing? Welcome to a new live stream here with me being the guest today, but of course happy to announce everything. I think you fixed your mic.
Well, thank you. Now we have the guest announcing himself. Well, thank you for that, Dirk. Now, so today, obviously, we're going to do live trading. We're going to talk about Forex. That's our main focus here. But we have to talk about the rocket ship in the room, which is obviously Bitcoin. I don't know what to say. We are currently at this very moment, we are 5.2% from all-time highs. We're trading at 65,215 on Bitstamp. I'm just going to bring this up right here. Alex is not with us today. He's not in the office. For some reason, he decided to stay at home.
He's too rich now because of all
the man
gains.
Exactly. He's like he bought so much Sol that he's just fuck it, I'm just not gonna go to the office. But apparently he doesn't have enough money to buy a decent camera, so he is having some troubles with the setup at home. So hopefully, you know what, we'll look at Sol here and
but you know what they say, you don't get rich from spending money. So
Well, you do get rich from having a good camera and being on the live streams and trading live with us, though. But yeah, he's going to come on tomorrow, definitely. So looking at Sol here, I made a couple of nice lines here on the chart. I believe this was back in the end of January, where it said like, yeah, well, if Sol bounces here, we're probably going to follow some nice trending behavior, and that's what we're seeing on Sol now. So from that point, we are currently up 55%, which is insane, actually. If you but then again, you look at Bitcoin, it's Bitcoin is actually also showing some insanely strong moves right here, and I don't know what's going on. Why what do you think this is happening right now, Dirk?
Well, I can pretty much actually nail it down. I had a look at, first of all, what's really funny in my opinion, I think it was on last week as well, Monday or Tuesday. And I remember when we parted ways, we kind of jokingly said, okay, next time, see you at 60,000 in a week or two. And we were all like, oh, ha, 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 because we were back then at, I think, 50 or 52,000. And now we're at 65,000. So this is how quickly things at the moment move with Bitcoin. And one thing I want to share here, because, of course, there's always the discussion now. Is it different this time? You see all those posts on social media stating, oh, this time is different. What reminds me a lot about actually what we've seen in the past two pre-bull markets or bull markets too. People are always screaming, it's different this time. So one thing that is different actually this time, in my opinion, is the Bitcoin spot ETFs. And for the first time ever, we actually have a method of measuring if they really add to the purchasing power, to the demand, to the daily of Bitcoin, or if they don't. Always remember, there are like 900 Bitcoins at the moment, mined daily on average, and that will by mid-April, 20th of April, around about split into half to 450 Bitcoin. Now, we can, if we have a look here at the metrics, maybe we can leave a link here later so people can see that for themselves. If not, I do things like this on my own YouTube channel. Also, I think there's a link in the description if you're interested to watch some stuff about this as well. So what I've noticed is, for the past weeks, whenever we had those crazy days of net inflows into Bitcoin, into the Bitcoin spot ETFs of over 400 million US dollars on a day, then we had those crazy large green candles on all days that happened. So I think there's a very, very strong correlation. I wouldn't be surprised to see something like this actually for today also again. Or maybe we are seeing the anticipation of this, because I mean, New York is joining in about an hour, and then we'll see things there. And so this is net inflow, means like the net money, surplus money that flows, so to say, into the Bitcoin ETFs, minus usually the money that flows out of the GBTC future Bitcoin futures ETF. And for example, on Friday, we saw like almost 500 million US dollars flowing out of the GBTC futures Bitcoin ETF. So actually we had a net number going out because the Bitcoin spot ETS couldn't compensate for that. But then again, you have like days like last week here, 26, 27, 28, where you have those crazy net inflows of over 400 million US dollars. You can see every time that happens, there is a large green candle. So really, we are seeing demand of the Bitcoin spot ETS being reflected within the Bitcoin spot market. And this in itself, in my opinion, is interesting already, because this is a component we didn't have in the previous bull runs. The question now, of course, is this going to hold up, or what can we use this information for? And in my opinion, this is a very good metric to later on, or soon maybe, we don't know yet, predict where might be this mid-cycle top that everybody's talking about. Normally we see a top before the halving, not an all-time high, just a top, a local top, then prices declining a little bit again after the halving, and then the pace really picking up. At the moment, it looks like we're going to see an all-time high before the halving. And I'm waiting now in order to determine where could be this local top. I'm looking daily at those net inflows. And should I see something like that, we have a day where we have net inflows of over 400 million US dollars into the market, but the price of Bitcoin doesn't do anything anymore, or even reverse a little bit to the south side, this would be for me a very strong indication that we've reached this local top. And this is really a moment where I seriously would consider to take some of my Bitcoin, at least for short term, of the markets. Now, I don't know, of course, when this is going to happen. It can happen today, can happen tomorrow, can happen in 3 weeks, 3 months, or 2 years. Maybe we are going to see this God candle to a 100K. I don't think so, but it seems like, I mean, 2 months ago, I also didn't think that we could go from or 1 month ago, actually, from 40K to 65K in a matter of a month. Yeah, that's it for Bitcoin at the moment. Really, really exciting times.
Yeah, absolutely. This is just an insane move that we're seeing on Bitcoin right now. It's absolutely amazing, really, to see this type of price action. But this is Bitcoin. I mean, this is what Bitcoin does. Every bull market, it just absolutely explodes. It's leaving people behind. It's just moving like it's an insane train at this point. I do think that, you know, we're looking at the chart right now. Before I move on, I just want to address one question right here. I'm seeing this pop up in the chat here. So let me quickly explain how our giveaway works here in these live streams. So in every live streams, we're giving away Bootcamp accounts. We are giving away 250K Bootcamps accounts for every 250 likes. So if we get 500 likes, we'll give away 200. I mean, we'll give away 250 Bootcamp accounts. If we get 1,000 likes, we will give away 4 250K Bootcamp accounts. And this is done closer to the end of the live stream, where we will give you a secret word. So we give you a secret word. You are then going to type that secret word in the chat, and you will then be entering into a random draw to win the prize. So you have to actually watch the live stream to be able to win the accounts. And remember to hit the like button, and you need to be subscribed to the channel to comment as well. So hopefully that covers this. If you have any more questions regarding the giveaway, I'm seeing some people say that they won an account, but they haven't got an account. What you can do is you can email alex@the5ers.com, and I'm sure you already have a conversation with him, because that's what you're supposed to be doing. If you win, you send an email to alex@the5ers.com, and he will take care of the rest. Okay. Any more questions that you have will be answered throughout this live stream. So we will take some pauses here and go through the questions. So let us know if you have any questions at all regarding our trading, the 5ers, our programs, or whatever, and we will take care of that. Yeah. So looking at Bitcoin, so I think, you know, if you are I'm sure Alex will watch this. I'm sure Alex is watching in the background. He sees this. He'll take care of that. He's probably getting a lot of emails, but you'll be sure that no one's going to be left behind here. You will be taken care of. So yeah, we're looking at Bitcoin here. Yeah, we're going to check Euro USD as well shortly. Now, if you're not in Bitcoin, if you're not in crypto, and you're feeling the FOMO, well, now it's not the time to enter. Obviously, I mean, you don't enter an asset when it's at all-time high resistance. If it's breaking out into all-time highs now, that's another story. If we manage to get above this resistance level and we start moving higher into all-time high, well, with good risk management, could you enter that market? Well, that's another story. But at resistance, got to be careful with that. However, we are seeing, if you're into crypto, if you're into altcoins, we are seeing some altcoins that have huge potential here. If Bitcoin breaks out, if Bitcoin establishes a support or floor above this current all-time high resistance, there are altcoins that are, have a long way to go to the upside that haven't really moved. And so one example would be the GMT chart right here, which, looks like a typical shitcoin chart, looks absolutely terrible, right? But if this is going to run, it has a lot of upside potential. Even to this resistance up here, you could get a nice, from current prices, that's a nice, doubling of your position right here. And if you manage to get an entry here, you could have a solid risk to reward on a trade like this. This would be like a 3 or 4R trade. So if you manage to find altcoins like this that haven't really exploded yet, but you're looking to ride that altcoin wave that I think is coming, then I would look at coins like this one, which has a pretty quiet chart, but it's an actual product. So a product that actually does something, and not just vaporware. I wouldn't recommend meme coins and stuff like that, but altcoin products that actually have a use case, that actually have a product to show for, but has a very, very boring chart. Maybe divide your risk up into 10 of those, and then just hold that for the remainder of this year. And I think you have a pretty good risk to reward on an investment like that. Okay, so we're not going to talk a lot about altcoins, obviously, because we're more into Bitcoin and perhaps Ethereum. But for those of you who are trading altcoins, make sure you if you're looking for an opportunity, this would be that one in my opinion. All right, Euro USD. So me and DIRK, we have. So you guys know that I'm transitioning more to intraday trading. So I'm transitioning from being a swing trader into doing more intraday trading on the low time frames, and I'm focused on Euro USD. So this was actually something I talked with DIRK about last week, I believe, right?
Yeah, on a daily level, because it's the same journey for me. Those who have seen me here on the channel already know I'm more of a long-term, the macro guy. My time horizon on pretty much 90% of my trades is like 3 to 5 years. But I said, I like the product of the 5ers very much, so I opened also a 250K account. I didn't get it for free. I want to highlight that I paid for it, just like everybody. And I said, Jonathan, I want to do this journey with you. I also want to try my luck, on the lower time frame charts and see. And what I can say so far, it's interesting. It's like completely new for me as well. So I'm probably at the point now where a lot of you guys watching are also huge difference between doing it long term and doing it on something like the 5-minute charts.
Yeah, and we also talked about, we do talk about Euro USD and how we're trading this going forward, and what type of strategies we're going to be using. And we talked about how, especially when I'm swing trading, I can watch quite a few pairs, because when you're getting, so maybe I get one swing trade on one pair in a month. Well, that means, obviously I need to watch a bigger list of pairs to be able to get a good number of trades in. And that usually means, for me, when swing trading, I'm watching like 40 different pairs to trade. And now I'm more transitioning into looking only at Euro USD. So I'm going to be trading only Euro USD for a couple of weeks, look at the results, and maybe add like GBP USD, because I've actually been back testing this quite extensively. So, well, not really quite extensively, but I've started doing a back testing session here in the way I'm trading Euro USD, and I can see that I get somewhere between at this point, I'm only at 11 trades. I've started backtesting in February, and I have between 2 and 3 trades in a day, and that to me is the perfect number. So if I can get 2 or 3 trades in a day in on Euro USD, I don't have to trade any other pair, and I'm also, if I can see consistency in that number of trades, if I can get 2 to 3 trades in a day, that means I can also create rules based on max number of trades per day. So if I look at my back testing and it says, you never have more than 3 trades a day, or maybe it just happens, 10% of the time you have, above 3 trades in a day. Well, that means that if I'm trading more than 3 trades per day regularly, I'm over trading. I'm not following the idea of what I did in back testing, and that's what I want to do. I want to back test, and then when live trading, I want to do it as perfectly as possible in following the backtesting results. So I'm going to work on this, and I think when I have 50 trades, I can look at the statistics and I can create rules based on that. But for now, I'm sticking to the rule that says no more than 3 trades per day. And if I have 2 losing trades in a row, which I have not seen yet in backtesting, if I have 2 losers in a row, I will quit trading for that day and then get back to it the day after. Because this is something I've been not lacking, but haven't been as disciplined as I should be with creating a rule-based system here on the lower timeframes and following the rules. I've been quite inconsistent with the number of trades per day and things like that. What do you think about that? Do you think it's important to have rules like that?
Yeah, I mean, I'm like somewhere in the middle. There are rules, of course, but maybe it's because I've been doing this on a longer time frame. So for such a long time now, I'm a lot about discretion as well. As long as your risk management is fixed, as long as discretion doesn't mean like, I'm going to deviate from maybe the 1% I risk per trade to 5 or 10% or something like this. A whole different story. I noticed last week when we were like chatting a bit about the 5-minute time frame, the setups there, and I noticed we very often had like the right idea for the day, but at least on my side, the execution was not good. I wouldn't get into the trade, or I would get into the trade at the wrong time. Or very often my problem, ironically, on this time frame, I have to say, because I don't have this problem long term, is that I'm not patient enough. I see something and then I say, what the heck, I'm going to close the trade now. So this is new for me, that let's say the timing matters more on this trade. This is also why I've decided now, because I always have a lot of other things going on throughout the day, obviously here, that maybe I shouldn't start by looking at the 5-minute time frame, but something like looking at the 1-hour time frame and then determining for myself where are the interesting levels actually for me to put my limit orders in. Close the screen, put limit order in, of course, with stop loss, with take profit and so on. And then that I don't have to look permanently at the screen. Because I notice that I otherwise tend to overanalyze things. Which also is, I think, a typical beginner's mistake. And yeah, for me, it's very surprising that the feeling of, so to say, scalping the markets again is so much different from what I'm usually doing.
Yeah, it's such a huge difference. I definitely agree with that. It's I think the biggest difference for me is, before, when I was focused on the 4-hour, I remember seeing a trade form, and then I'm looking at the candle and I'm like, okay, so in 3 hours this trade will confirm. Now it's like, well, in 3 hours my trading session is over.
Yeah.
So in 3 hours I should have 1 or 2 trades in. So it's a big difference in pace. And what I like though is I can switch off much more easily mentally. I now have a way of distinguishing between real life and trading in a way, because like in the past I almost always had a position open over the weekend, overnight. I always had something working for me, right? And I remember, I left the office at maybe a 3 or 4, and I remember like constantly thinking about that open position, thinking about what's happening, thinking about the news that might affect it, what's happening around the world, things like that. And now what I find is that I can be hyper focused for a certain amount of hours in a day, and then I'm just gonna switch off, and I'm gonna go back. I'm gonna focus on my family, basically. And I think that's super important, because I find myself being very distant in my personal relationships when I have positions open and running, which that like that affects trading. If you're too distant from your personal relationships, that will affect you in a negative way, and that will also affect your psychology, your mental state of mind, which will also affect trading. So I'm kind of thinking like maybe this way of trading is actually for me, because in the past I've always said like, nah, this is not for me, this is not the way I'm supposed to be trading. But maybe it actually is, because now I found a different perspective on this. So yeah, it's interesting. Maybe I'm just adapting, because we're obviously, and as humans, we're good at adapting. So maybe that's what I'm doing.
Well, it takes some time to adapt also, no? Yeah.
Yeah.
Probably not going to have a success on this time frame in the same way that you have with your swing trading. But one point I agree very much with is this, you turn off your screen by the end of the evening, at least for that part of the trading, and then you have kind of a free mind. I absolutely know what you mean, like that. If you are in positions, especially if you're in positions that are currently not running for you, you kind of think about them. I think about when I maybe have dinner with my daughter, with my wife, being a little bit distant and so on and so forth. I don't have that on the very short time frames, because I close all the positions at night. I also don't have that for my long-term trades, because that I know I don't need to look even like every day on them. Once a week is maybe enough. Yeah. Do you have any trades open, or did you trade anything already today in euro dollar?
No, so today it's been a quite slow day. I've had a struggle with having this cold, and I got this cough that comes every night when I'm sleeping. I wake up in the middle of the night, start coughing. So I've had a very bad night's sleep today. I woke up very tired, and I felt like I'm not going to be trading the morning session today. I'm going to wait till we have the live trading room, and I have a bit more energy, because I do think like. I went through my trades, and I went through all my notes this weekend for my trading. And one thing that really stood out is I need to feel in the right place of mind when I'm trading. Like that's all my best trades, even the winners and the losers. It's so very clear that because I'm very big on keeping notes. I do keep detailed notes on everything I do in trading, and for all the trades I've taken that are good trades that follow the plan, they all have one thing in common, and it's like I make notes on this trade was effortless. I was in a good state of mind when taking this trade, and so I think I have to be very mindful of my state of mind. And now I feel like, yeah, if I see a trade right now, I'm just gonna take it. But on Euro USD here, I don't really see a lot of opportunities right now. If I'm looking at this whole move here, there was a very good opportunity at around 11. So a couple of hours ago, and I can show you guys this. This is for me almost a picture perfect example. So you see that you have a level here. We can probably extend this level all the way. Maybe we can incorporate even like this part. But when I add a level here, you're going to see exactly what I mean. You're going to see a break and retest with a 5-minute bullish engulfing candle. It's not picture perfect because it's missing the stochastics RSI, but honestly, when I'm trading like this, I'm not putting too much emphasis on the stochastics RSI. right, so I got a message from Alex about a trade he's did it take this trade? Oh yeah. So he actually bought that retest, that little bastard. No, I'm kidding. It's beautiful. That's a good one. Anyway, so so I mean, you came down here, you hit the 20 made, the 50 made, the 50% fib, even hit the 0.618, and up here I see. So at the you can either exit at the minus 236 here, or at these highs. So an entry here would basically be something, I believe, something like this. I would probably settle for 1.5 R, and so I missed one trade here, and it's important to remember that this is a missed trade. So statistically, if I were active in the market at this point, I should have now had one trade. Okay, so if I manage to get one more trade in today, I'm at 2 trades. And if I get 2 trades in today, well, I'm at my limit. Okay, so I'm at my limit. So it's important to remember that it's not only about how many trades you take. It's important to remember how many trades have the market offered you. Okay, so you kind of have to go through the day and say, like, well, if EU has already given you 3 opportunities, well, maybe that's the limit. So gotta keep that in mind. Now I know it's already 2:30, so probably not gonna get a lot of trades in today. But now we're kind of breaking down here. So, I mean, what I'm looking at now is basically a break and retest to the downside, and we have the weekly open here. So if we would ignore the weekly open, then maybe something like this with an entry here. But then the weekly open is support, and we're seeing a support area here. I would just mark out this whole area right here, and I think this level could also be visible on perhaps at least the 15-minute, right? So it's a very clear 15-minute resistance. We can drag it all the way here, so to the all the way. Yeah, I mean, it goes straight through here. So this is a big level. And on the 1 hour, yeah, I would say that it's a solid level on the 1 hour as well. And we got the weekly open going straight through this level. Yes, the weekly open, it's Monday, but again, it you can see how it's well positioned here in the middle. So for EU here, well, if we zoom out, we see that I have a green level here. Now, my green levels are the 1 hour level, and then I got the yellow one, which is 4 hour levels. And the way I'm adding these levels is basically and it's going to be really interesting to have Scruffy Trader on Wednesday, because I took this from him, and it's actually it's quite simple, right? If you know horizontal levels, you know how to do this. But you go to the line chart and then you just add level wherever there's a peak on the line chart, which kind of line. So that's a 1 hour level, very visible on the 1 hour, and then below is a 4 hour level. So if this level breaks, it kind of makes sense to see a move down to this level. And that's what I'm watching right now. So I'm trying to find, and the way I'm doing this is actually in reverse to what I would recommend. I recommend people do top-down analysis, but because of the fact that I know what EU looks like on the higher time frames, I already have my bias. I've already looked at the weekly, daily, 4 hour, and 1 hour, because now I'm only watching this chart every day. So I know what we're watching, and we're in a range right now. So I don't really have a bias at this point. Well, I guess I have a slight bias to the upside because of this, downtrend, uptrend, range. So I have a slight bias to the upside because the primary trend, in my opinion, is bullish. We're seeing a bullish break in market structure. We're above the daily moving average. We're seeing a bullish break in market structure, but we are also printing a range here. So I'm slightly bullish bias here. So if we break this level to the downside, I'm basically looking at something like this. Other than that, I'm not really sure. We could see a potential long here as well. So if I add the fib from this low to that high, we're currently inside the reload zone. We just had a wick down to the weekly open. And if we form it kind of looks like we have a W on the 1 minute. Yeah, so we might be forming a W here on the 1 minute, with this being the neckline of the W. If we can get a break and retest of that neckline, we could see a move up higher. So the way this would look on the 5 minute is basically, I would say, a break and retest of this level. Something like this, where you have the 1 minute W and then a break and retest like this, and then we're probably traded up to this region. So I'm thinking maybe 1.5 R here. Yeah, something like that. So that's a trade I'm looking at. So right now, I think I have two ideas that I'm just waiting to play out. I have one alert up here and one alert down here. What's your thought on that, DIRK?
Very interesting, and maybe you can share my screen, like how the picture, I think, can like change over the time frame. So as I said earlier, I'm looking at the 1 hour. I actually this morning, before I dropped off my my daughter at the kindergarten, I said to myself I wanted to place a short order on the FIB up here at around 108.51. But I didn't do it. I thought like, okay, I can still do it when I'm arriving in office. And this is when we had this candle here, this red one already, going all the way down here to the 21 EMA. Now, I placed a limit order later here, so I shorted the market at 108.51. Why did I do this? Because on the 1 hour time frame, it looks for me that we had a break in market structure already. We didn't see higher highs and higher lows anymore after this part of the chart here, but instead moved kind of in a sideways market. And for me, the confirmation that we are entering in a euro bull market, would be if we go above the previous week high. This is where I have my stop loss also at 108.70, because then I would prefer playing it to the upside again. As long as we don't do that, I favor that the euro becomes weaker again, US dollar becomes strong again, that we see maybe a move down here to the 200 EMA moving average that is around about at 108.25 at the moment. But we can see right now we are kind of bouncing off, going into that zone again. So I could have taken a profit there, but it's like 10 pips, not a good risk reward ratio, because my stop loss is like 15 pips in this case. So I would prefer to hold on to this trade either until I'm stopped out, that's legitimate, of course, or until we go back to the 200 EMA, the 200 hours moving average in this case. That's a good risk reward ratio. In that case also, that would mean I gained about 26 pips, whereas I risked 15 or 16 pips. So that's acceptable for me. So from my point of view at the moment, sideways range, undecided. Maybe it's going to decide tomorrow with some data, economic data coming in tomorrow. I would, of course, prefer to close the trade. However, this is typical a trade I could imagine, if we don't see much going to the upside or downside today anymore, to hold on to, because the swap is in my favor. If you look at the 5ers MetaTrader and you look at the swap for short euro dollar, you would actually get a little bit of interest, a little bit of swap every day. So it's in your favor in this case, which makes it acceptable for me to hold on, maybe even until tomorrow if we don't see action. I was hoping, of course, just now that we see the break in market structure going down, but it looks at the moment like it wants to test the 0.78 FIB from the range we traded in last week, from the weekly high, previous week high to previous week low once again. Yeah, this is kind of my strategy at the moment.
Yeah, I'm just going to share my screen here and show you guys. I'm entering orders for this trade right now. So I'm going to enter a, what is it, 8, I think it's 7. It should be 7, so I'm risking 0.25%, and the entry is going to be right there. So now the idea that I had, it's going to be pending, so it's going to be price and 7. Not 87. All right there. So I got my entry. Where's my entry at? I can't. Why can't I see it? It's right there. So it should come down lower. I'm not going to mark it into this one. So one of the things I looked at throughout the weekend is do not place market enter orders. It's 9 times out of 10 price will come down and hit that limit order. And if it doesn't, then I need to work on adjusting where I put the limit order. I've given away. I've basically given back too much profit by market entering. So right now I have the limit order right here. Yes, it kind of bounces here, but if I enter here now, the trade goes from being a 1.7 to 1, which is a huge difference. So a lot of times last week, I actually did market enter when I thought the entry was gone, and I gave away, 0.7R, which is quite a lot. And now all right, so it should be filled here. So the idea with this trade is basically based on the somewhat of a, I guess it's technically not a W. And when I get the W's, I'd like to have the right leg higher here. So I want it to be like higher, something like that. The right leg being higher, for it to be like a really good looking W structure. But anyway, the idea is, well, let's see how this goes. I'm gonna put an alert here, so that would be stop loss. Then up here. All right, that was not the reaction I was hoping for, obviously.
Let's see, but it's actually nice how we both, based on different time frames, come to opposite conclusions. That's very interesting for me. It's like what you just said makes super much sense. And yeah, let's see how it plays out.
Yeah, we'll see. Is there? We don't have news today, do we?
Today, nothing. Tomorrow we have, what was it? Here, let me have a look quickly. I think ISM services, PMI, not the super most important of news tomorrow.
I haven't put in a stop loss on this one yet, so I got to do that.
Wednesday, of course, is going to be more interesting. Bank of Canada, if you're trading Canadian dollar. JOLTS job openings, that's, of course, interesting in terms of the NFP on Friday. So that usually gives a good hint on whether the NFP are going to be above or below expectations.
Yeah. I'm looking at the 1 minute.
I don't want
here
to be in the market when that comes out.
So as a stop level, I can see how much I'm risking on this one. That'd be more 420. What happens if I draw it down here? 518. I think 518 is within my risk. So I should have had my stop loss below the weekly open. Now that's a 1.2R trade, but I have to have it below weekly open. It's still within my risk parameters because I entered a 7 lot position, and I could have entered an 8. So still okay-ish. I gotta have my stop loss down there. And then I have a.
What are you risking in terms of percent there of your account balance?
I think it's 0.25, but now risking good. with the new stop loss, I should be risking like 0.30, 35 or something like that.
I like to, at the moment, I think we talked about this last week also, said like I'm doing like mini positions for this one. I'm risking like 0.1, which is on the 100K evaluation account or 250K evaluation account later on. $100. Yeah. But it's good, because you kind of have to build up your confidence slowly also.
Yeah.
And I think if you're starting out with something new and you take like 1% in risk, there is always the likelihood that you are 4 or 5 times in a row wrong, and which then means usually that you've blown that evaluation account already.
Yeah, no, for sure. It's having, when you backtest the system, usually. When you backtest the system, usually what you do is you have like everything's perfect. You're taking all the trades because even if you don't want to admit it, there's always going to be that look ahead bias. Even when you use the replay function. So if I select replay here and I go here, even if I don't want to admit it, I still know like price is going to come up here. So you have that bias. But when backtesting, you might see that there's a possibility of having like 3 losses in a row from time to time. Well, because of the mental impact when you're live trading, that 3 losses in a row might easily become 5 or even 6 losses in a row. And that's part of the forward testing phase. And if you're risking 1% per trade and you're starting out on a new account, well, 6 losses in a row, then you lose the account with 1% per trade. So I think for most people starting out, and especially when you're working on a new strategy, definitely risk very, very small, almost like so that it doesn't affect you at all. And then when you see that your performance is closer to what your backtesting result is, then you can start increasing that risk, but by looking at the statistics, because you always have to make sure that you're not risking more than what your losing streak can survive. Another great thing you can do is, and this is totally up to you, this is personal preference, basically what you're doing is you're leaving. So when you have a payout ready, let's say you're up 5% and you can request a payout. Now, if you have a max drawdown of 6%, if you leave 1 or 2% in the account, that drawdown obviously goes up 1 or 2%. So you can try to leave some money in the account and then adjust your risk per trade based on that, which is also an option. But then, of course, you're obviously leaving money in the account. But I think that's a decent strategy as well. All right, so let's see. We got Euro USD is bouncing here right now. Looks this is just the type of reaction I want to see. Well, I know I just said that it's not the type of reaction I want to see, but if you add a fib from that low to this low, you'll see that it hits the reload zone very nicely here. So usually this is what I want to see right now. This now has the sign of a break of structure. Now this can of course just break down, and if it does, my stop loss is going to get hit, and that's that, right? But what we have now is a lower low and a lower low with a high, lower high, higher low, and potentially a new higher high. So this is now the definition of a break in market structure on the lower time frames. And these are the things I look for when trading the lower time frames. Now, obviously, the best way for me to really execute this would actually have been to look at this 5-minute candle closing above the level. This confirms the idea, and this confirms that I want to enter here. But what I could have done, differently is to incorporate the 1-minute structure as well. So if I saw a price coming down here and then bouncing at this point, maybe I could have entered, because now I have even more conviction, and I can also have a much tighter stop loss for higher R. But that's something I'm working on right now. I want to be focused on the 1 minute, the 5 minutes. And I did have a question here: do you stick to just 5-minute time frame now? And for my execution, I'm looking at 5 minutes and 1 minute. And then to get a sense of direction, to get a sense of levels, I look at the 15-minute, 1 hour, 4 hour, and daily. Now, there's no point of me going to the weekly, because the weekly isn't really, well, actually, the weekly looks pretty good. But usually my focus are when I'm drawing the levels. So every weekend or every Monday, when I start to add the levels, my focus is going to be on the daily and the 4 hour, because it's usually the daily and 4 hour levels where you see the big reactions. When prices in this type of range, though, if I would be watching this normally when swing trading, I would be watching this and I would say this is not for me. This looks like just a range. This is very messy. I don't know what to make of this. So at this point, when I'm on the lower time frames, I kind of have to go down and base the levels on the 1 minute and the 15-minute, because there's not a lot of super clear levels here. But on the 1 hour, there's like the range is very typical on the 1 hour, and now I can trade basically based on these levels. Right, so at least I'm in profit now. It's looking okay-ish.
That's a typical Monday so far, no? It's like a pretty tight range, really.
Yeah, so now I think as soon as we can get above this level where I have my alerts, so as soon as we can get above this level here, then I can safely say that we now have a 1 minute market structure break in action, and I just, put myself in the hands of the market and let the market just, do whatever it wants to do with my account, basically. That's what we have to do, right?
It is. I mean,
some people put their hands
gotta have your strategy, and then you have to stick to your strategy.
Yeah, I mean, some people, they put their future in the hands of God. I put it in EU, basically. Let it do whatever it wants to do. I'm all for it. Right. Let's see what we get. Are you so maybe you can you know what? Let's do a couple of questions before we move on, because I want to talk about
Good
you,
idea.
not about you. I want to talk with you about your 1 hour 1 hour idea after we go through some question. Okay. Advice on psychology, lack of patience.
Yeah, that's a pretty normal one. That's a common one. If you remember earlier, I commented that about myself as well last week when I started trading those lower time structures again, that I didn't give the trade enough time to develop, that I exited too early, that I was impatient entering, it's always easy, of course, in hindsight to see like the mistakes you made or what you should have done, but it doesn't help to. From my experience, if the journey is going to be exactly the same that it is for my longer term swing trading, especially also my long-term positions, this is normally something you'll never fully get rid of, because it also depends on your state of mind. Like when I have a very hectic day going on with a lot of stuff coming at me, maybe from outside of trading also, then I'm always going to, I notice that about myself, I'm always going to be more impatient. And the likelihood of me prematurely closing trades is much, much higher than when I'm, so to say, in the zone, when I cut the whole world out and I'm focused on things. This can go in the other direction, however, as well. Again, from my experience, this is something usually that you get rid of the longer you do one thing. You get more patient. Usually you become more confident with your trading decisions, because like a loss of patience is always a sign also of that I'm not confident with my decision or with myself, in my opinion, at least. That's at least the way it is for me. So give it time, pressure yourself, but don't pressure yourself too much that your subconsciousness has to react to what you want. It takes some time to change the core of our being. But if you're already at that level where you think about something like this, in my opinion, that means you are far ahead of other trading beginners, if you are a beginner that is already. What do you think, Jonathan?
No, definitely. If you're thinking about these things now and you're in these live streams, I think, we talk about how it's a huge number, maybe 95, 97% of all people that try to become day traders, they fail within a year. It's a very, very high number. And for those of you who have been in the market for longer than a year, you start thinking about these types of things. You start thinking about your mental weaknesses and how that might affect your trading. You're in these live streams, you're watching us trade live, you're watching us discuss these things and talk about how we're trading. You're already ahead. You're way ahead of most people. And I think you're definitely in like the top 20 or even 10%. Because of that simple fact. So you should, give yourself a tap on the shoulder and give yourself credit for that, because it's a big step. Most people never really even come to those conclusions that they have a problem with discipline. But we all do. And the fact is, we as humans, we are not disciplined 24 hours of the day. It's impossible, because discipline is like a muscle, and you have to work on it to get stronger discipline. But there also comes to a point where you can no longer, like, you have a finite number of hours of discipline in a day. So you're not going to be able to be disciplined 12 hours of the day. And now there are, of course, ways of increasing your strength and your discipline, of course. And for me, that's, I think, one of the best advice is trade less. I mean, honestly, like, trade less and focus on what's important for you, like what makes you happy in life, what makes you mentally strong and happy. Because if you're only trading all the time, if you're just in the market and executing orders all the time, that's extremely stressful, and you're going to see stop out after stop out after stop out, and you're going to become stressed. You're going to become like, it's very difficult to be disciplined all the time in those scenarios. So I think what's good is, as soon as you start feeling that the discipline is kind of fading, you take a step back and you accept the fact that you are not disciplined right now and you should not be trading. If you create a routine around that, you basically create a routine that says, I'm only going to be trading when I'm disciplined, which means you're going to be disciplined in trading. Now, that might be, in the beginning, that might be 10 minutes a day. And you'll expand that to 1 hour a day or 4 hours a day. And so I think that's what you have to work on. What works for me, like before this live trading session, I don't know if you do you know about Wim Hof, that guy who swims in the ice lakes and all of that, the Iceman, Wim Hof from the Netherlands. Do you know about him?
I've heard about that. I saw a documentary about him as well.
But he is awesome, and he has this breathing exercise on YouTube. It's like 10 minutes long, where you basically like breathe in and out, and then you hold your breath and that sort of stuff. And things like that can really help you with discipline, because it gives you energy and it resets your mental balance, and that's what it's all about, like resetting that mental balance. So I think work on like mindfulness tools and take breaks, and remember that trading is not about executing orders in the market. Like what I'm doing now, looking at this trade, first of all, I don't have to look at this trade, because I know that either the alert here is going to go off or my stop loss is going to go off. So I don't have to watch EU right here. I'm not going to make any decisions on this trade in this area anyway. So all I did was I did my analysis. The trade got activated. I executed the order. That's only about 5 minutes, and that's actual trading. What happens, and the more important thing you should focus on, is what happens when you're not trading. What happens when you're not executing orders? What are you working on? What type of ideas are you backtesting? What type of statistics are you gathering? What are you writing in your journal? All of that will build up that discipline. And it's not easy, but that's what trading is all about. And that kind of answered this question as well. Are you thinking about moving stop loss? Yes, I'm constantly thinking about moving stop loss, but because I'm watching the screen here, am I going to move stop loss? That's the difference between discipline and not having discipline. I'm thinking about moving my stop loss, absolutely, all the time. I'm thinking about moving my stop loss, and if I would not be disciplined today, I would probably do that. But the discipline part is in knowing that either my stop loss is going to get hit or my alert is going to get activated up here. If this alert gets activated, I will move my stop loss to the original stop loss level, and that's discipline.
And I really cannot highlight what Jonathan said just now enough, because I know I have a tendency to sometimes do that as well. I noticed last week, like move my stop loss to break even. But what does that mathematically speaking long term? You are going to mess up your risk reward long term. Let's say if you aim for 1.5 here on the lower time frame, you aim for 1.5 risk reward ratio, so you can be correct in below 50% of the time and still not lose money. First of all, when are you going to move your stop loss to break even? what is that, when you reach like 50% of your take profit, do you have a take profit at all, and so on and so forth? And have you back tested before maybe what happens when you move your stop loss to break even with your overall profit over, let's say, like 30, 40, 50, 100 trades? And what happens to your risk reward ratio? Is it better? Well, then it's certainly a strategy. Is it worse? What it's most likely going to be? Well, then there is no reason to move your stop loss. It's kind of like our brain is trying to trick us into, because of course we want that winner. We don't want to lose money. By the end of the day, we want to say we were right about our trade, or we didn't lose money because we were so smart, we had the right idea, but the market thought in a different way, moved in a different way, but we ended up not losing money because we are so smart. That's what we want to tell ourselves. That's why I prefer, really, like Jonathan also said, I set my stop loss, I set my take profit, and then I just let nature find its course. Because you'll find all types of reasons, in Jonathan's example now, to move the stop loss to break even. Market is running in my direction. I should do that now. If I don't do that, I'm dumb or whatever, But the truth is, you're dumb, but not for the reasons that you think. Sorry, I didn't want to insult anybody out there. Let me say I am dumb, because this is something I did last week, by the way. And if you don't believe me, I can show you the conversation I had about it on Telegram with Jonathan. And it's long-term going to mess up your risk-reward ratio. So you have an idea, you stick to the idea.
Yeah, and it's always such a wonderful idea to move stops to entry, because you feel like you're in the trade and you're like, look at that. I'm just gonna make this a risk-free trade, and then all of a sudden, like, wait a minute, we say that it's a risk-free trade, but we move stops to entry. Entry gets hit, we're out at break even, and then it moves to TP. So we're saying, like, well, at least I got out the break even. At least it's not a losing trade. But it kind of is a losing trade, because you took a winning trade out of your statistics and you made it a break even, which means your win rate is lowering, your average risk to reward is losing. So that free trade becomes a losing trade long term. You're screwing up your statistics, right? So we have a question here with I'm just gonna go fire away at some questions here. 3 orders in total, and how many % risk in total, please? So what I do is now I think, so what I do is 0.25% per trade, because in the testing phase of this system here, my results are not the best. Honestly, if you look at my live account, it's not the best results. If I would have risked 1% per trade, I would not be in a very good position. So what I'm doing now is I'm risking 0.25% risk, because I want to make sure that the drawdown is not too big. So right now with this strategy, I'm around I'm around break even, slightly unprofitable with the way I'm trading right now for the last, I think, two weeks. And that's, I believe, one big part of that is if I would have risked 1% and I would have seen that drawdown become too big, it would not be a great feeling. But now with 0.25% risk, that's good. So I think we go back to the idea that when you decide how many % per trade you should be risking, you have, first of all, you should not be risking more than you can afford to lose. Well, if you're trading a funded account, it's not really your money, so you can afford to lose quite a lot, but you will lose the account. So what you should think instead is how much are you willing to risk based on how much you're comfortable losing. Okay, so how much are you comfortable losing? If you look at your MetaTrader account, are you comfortable with that saying $400 or $4,000? Obviously, for most people, seeing $4,000 when hitting that stop loss, probably not going to feel very great. But if you see $100, then it's okay, because depending on the account you have, that's obviously very important to take. What day is it today? It's Monday. It's Monday. Yeah. So we have in Sweden, we have every Monday, every first Monday of the month at 3 p.m. we have this siren alarm go off all around the country.
Actually, I meant your trading view alerts.
Yeah, no, it happened at the same time. Like, wait a minute, is the Russians coming? And I'm getting swing alerts here. It's like it's a bit weird. Anyway,
All right, here we go
so,
now. This is going to be interesting now if we make it over that zone.
Right. So, more questions. What is best risk management, by percentage or by value? Like having a full value that I feel comfortable risking. It's the same thing. It's the same thing. Right? It's the same thing. You look. Well, okay, Dirk. You obviously have something to say about that.
Yeah, I mean, it's like if that means like let's say you say, for example, I'm comfortable risking $200 on my trade. Okay, if your account balance is $500 and you say something like this, I would say that's not healthy. If your account balance is $100,000, it's a whole different story. Then that's a good ratio, you know. So maybe start by choosing the percentage. Like say something like, let's say 0.25%, 0.5%, 1%. And then you compare like, what is that in US dollars or in your local currency? And if you then still feel comfortable, don't go above 1%, please, in the beginning. I think it's already too high, but that's the absolute max really you should be risking. If that means, if that translates into a US dollar or local currency value that you feel comfortable with, well, then you have your answer there. If that is a currency value where you say like, ooh, I don't feel comfortable, I know myself. If I then lose 3 times in a row, then I'm going to make bad decisions probably going forward because I'm trying to earn it back or whatever. Well, then you should go lower than that. That would be my answer to this.
Well, I'm just going to go ahead and say you focus on risk in percentage. Like it's for me, that's the only way. Now, if you want to translate that into a specific value, then go ahead. But you got to understand that, I mean, trading it has a lot to do with statistics and math, right? So, especially with risk management, it's very important. You have to look at, like, you have to divide your drawdown into a specific number of trades. So if you have a 6% drawdown and you're risking 1% of trade, well, you have 6 trades until you lose the account. Now, if you cut that risk in half, you risk 0.5%. Well, now you have 12 trades before you lose that account. You cut that in half again, you risk 0.25%. Now you have 24 trades until you lose the account. You're not going to have 24 losers in a row. If you do, then you should not have a funded account. So if you risk 0.25%, you're very, very safe, and you can feel confident that you're not going to lose that account until you go on total tilt. But if you risk 1% or even 0.5%, there is there is a possibility. And statistically, having 6 losers in a row will happen. It's going to happen at some point. Even 10 losers in a row with a 50% win rate, having 10 losers in a row is more realistic than you think. There's a lot of different simulations out there. You can look at that. I believe maybe it's the Monte Carlo simulation, where you will also get where they will run a simulation of your win rate and your risk to reward. You run that through hundreds of different simulations, and you look at what's the risk of having a certain number of losers in a row. That's very good to watch. And then I would argue that it's a good way to base your risk per trade based on what the Monte Carlo simulation is showing you is possible, just statistically. Whatever works, but I think. I think it's important to understand that. So here's a question. Now, if you're trading on MetaTrader, now MetaTrader has this thing where you can add EAs, which is basically expert advisors, and it's a really, yes, it might look old, but it's actually a really powerful trading platform when you understand how to utilize this correctly. And I have a free tool here called the position size calculator. You can Google that. You can Google position size calculator for MT5. It's going to bring you to a website called earnedforex.com. You get all the instruction on how to install it right there. It's a very good tool. You can type in 0.25 in risk, and it will show you here, based on my entry stop loss and TP, that my position size should be at 7.86, so around 8. I now have a 7 lot position open here. Right. How many indicators do you have?
Sorry, can I just quickly say I was typing just now because I wanted to look that up actually about being wrong a certain number of times in a row, depending on what your success rate, so to say, is. And like if you have a system, if you're trading and you are 55% correct of the time, which is already really good, for trading with the right risk reward management, you'll be a very successful trader with that. So let's say you're 55% correct of the time. The probability of having 5 incorrect trades that hit your stop loss first in a row is at around 1.06%. Now that itself doesn't sound like a lot, right? Oh, there's a 1% chance that I'm wrong. But it's a 1% chance per trade that this is going to happen. And I don't know about you, like back in the days when I was still playing online games or whatever, where you have like a loot chance of something appearing by 1% or 2% or something like this. It happens every now and then. And on 1,000 trades, it will happen to you. Eventually, it will happen. And based on my experience with trading, it always happens at the worst possible moment also. Sorry, didn't want to interrupt you, but that question made me kind of nosy.
No, definitely. There's actually like you can go to Google and you can search for Monte Carlo simulation, and there's actually some interesting. It's very interesting to see the statistics of this. Now I can't find the Monte Carlo simulation where you also get the risk of losing streaks. I will try to look that up and maybe have a link to that in yesterday's live stream, and we can look at some examples, because that's a really powerful tool to have. When it comes to indicators, I think the correct answer is not, well, the correct question is it's not how many indicators you have. It's how you it's which indicator you have and how you're using the indicator. So the more I trade, and especially the more I trade on the lower time frames, the bigger the urge is for me to actually remove all indicators, because I'm not really sure at this point why I keep having the indicators on. It's because I've been backtesting, and yes, it has an edge, but so I guess that's why I have it on. But everything I do is it's found in price action. It's you have this horizontal level. You the same, like everything is in price. Now, if I add my moving averages here, so basically what I have is the 20 EMA, the 50 EMA, and the 200 EMA. And if I add that, it's like the 20 and the 50, they're basically going against my idea here. So if I would take this trade based on just the indicator, I would not be taking this trade. I liked how prices kind of react into the 200 EMA. But all in all, what happened here was, and also stochastics RSI, well, it gave a good signal here, but now it's like it's in the totally wrong area. So a lot of times when I go back and I look at my trades, what it shows me is that price action is what determined if I should have entered the trade or not, and not really the indicators. And that's actually what I'm doing with this backtesting I'm doing right here. I'm not only testing, this testing the ideas here. I'm also testing the indicators. So, for example, I have Confluent 1 here. It says reversal inside the reload zone. This is for the trades that hit the 0.5 and then the 0.382. So this is a new thing that I've added. And then I'm testing the 20, the 50, and the 200 EMA. And the stochastics RSI location. So looking at the stochastics RSI, there is definitely an edge here. But basically all the trades I've taken is in agreement with the stochastics RSI. And I'm also testing different TPs. But what this shows me is that, well, 80% of the trades, there's an 80% win rate for the trades that hit the reload zone before entry. So that's an obvious edge, okay?
That's very high, actually. 80%.
Yes.
Wow.
But it's 5 trades out of 11, so few trades. And then on the 0.382, it's actually 60%, but the cumulative R is quite low, and that's understandable because the reversal happens much higher. But when I see stuff like this, when there's like a 80% win rate, that's when I start changing things. And then I'm also looking at the confluence here between TP1, which is the FTA, the first trouble area, and then TP2, which is the, like, I'm looking for price to create a new high if going long. The cumulative R of TP1 is 9.8, and the TP2 is 5.4. So having a lower TP when going along actually gives me higher risk to reward on average. You see, average risk to reward is 1.4, and this one is actually 1.3. So yeah, that's what I'm testing. And
of course, you need like more data in this probably still. No, you said you had something like 20 trade examples.
Yeah, I have 11 trades now, and I'm gonna journal all of February and more till I get 50 trades, and then with 50 trades I can start making some adjustment to the system, and I will. So, for example, if the RLZ bounce continues to show 80% win rate, obviously that's all I'm gonna do. There's no reason for me to do anything else. Yeah. Because 80% is insane. And even if I get 80% in backtesting, that might meet 60% in live trading, which is also very good.
That is super good, especially if you have like a R of 1.5 or even higher. Super good. That's all you can ask for, really.
Yeah, definitely. Dirk, do you want to take a 10-minute break? And
yeah, I wanted to suggest that actually just now as well. Yeah. Do a small break. I can get myself another coffee, and then.
And guys, by the way, we are looking to expand these live streams. So if you're interested in joining the live trading room as someone who wants to show their TA, or maybe you have something that might help us in this live trading room, anything that you might want to offer, we definitely consider it. So send an email to tradingroom@the5ers.com with any suggestions that you might have, or any questions or anything like that, if you want to join, whatever. And yeah, well, let's go on a break, and we will be back in 10 minutes. All right.
See you then. Okay, we're back, but Jonathan is missing. Well, that's something. Jonathan, are you there? I think your audience is missing you. But anyway, guys, damn, I cannot share my screen here. Jonathan has. He's back.
Did it run out?
Yeah, I did.
Weird. I said
I wanted to start talking further about euro dollar, but of course I couldn't share my screen.
That's weird. I set a timer on my on my watch. Not too long, was it?
No, it was just like 10 seconds or 15.
All right, perfect. So did some miscalculation there. All right, so what were you saying? Sorry, I interrupted you.
No, all good. I said we can continue to talk about euro dollar because it seems like there's a little bit of decision time now.
Yeah,
with the level here around 108.50, which for me was the trigger to enter the short trade earlier. So things at the moment looking good, of course. If we go higher than that actually we are on the good way to your take profit, in my opinion. Because on the hourly, it looks a bit like the 21 hours moving average, exponential moving average that is acted as a nice level of support, I must say. But still, my trade is valid, so I stick to my decision here, obviously.
Yeah, I mean, for me, it's obviously I'm feeling confident with this. It's exactly what I wanted to see. I wish that if I would have done anything differently here, I think entry was good. Stop loss placement was not. The first stop loss placement was not the best. So my risk on this trade, you see 518 and 6. So the risk to reward here is not as good as it could have been. And I calculated the lot sizes a little bit differently because of I had to increase my stop loss. So yeah, it's a little bit. I need to remember that for next time, not to have a too tight stop loss, because this stop loss here, this is good. It's below that wick, and I gave it enough room because the first stop loss was here, and that wick could have easily just went down there and took me out. So at this point, obviously, I'm feeling good about the trade. This is 100% confirmed at this stage, and now it's time to look at. If my TP is really in the right in the correct area or not. So,
but the thing is also, on the lower time frame, the time it takes sometimes to set up the trade, to choose like, okay, where would be an appropriate stop loss? Does the take profit match the target, and so on and so on. Sometimes if the markets are volatile, pricement is so fast, and if you're trading 1 minute charts or 5 minute charts, like those 5 or 6 extra pips against you or into your direction can be the opposite, of course, also can like totally change the layout of your trade already again, or of a risk management of a trade at least.
Yeah,
so
absolutely.
It tends to get a little bit hectic there, of course.
Yeah, you're absolutely right about that. So when I do see that a trade is forming, I always look to the right here and see like how many minutes do I have left on the 5-minute candle, and sometimes it's only going to say like 10 seconds, and then I have to kind of hurry, open MT5, put in the orders and everything, and it's a bit stressful. Yeah, but if you and one thing that I noticed that's very, very important is. Sometimes what I do is, because I'm a little bit stressed, maybe I need to put in the order in the market in the next 10 seconds. I open a new position and I put in the entry price, but I don't put in the stop loss. The stop loss, I modify the order afterwards, put in the stop loss and TP. But sometimes I forget about the stop loss. That could be catastrophic.
Yeah.
Sometimes I've seen actually happened last week. I put in an order where my stop loss is. And I got a alert on TradingView that said stop loss has been hit, and I'm watching this. I'm like, well, it's too bad. And then I felt this, like my heart almost stopped, man. I'm like, oh, I forgot to put in a stop loss order. Like, what if this is like a flash crash and my whole account could be gone? So I go down to the office, I open TradingView, and fortunately for me, it was just trading around my stop loss. Okay, I could market close that trade. But that is super important. Remember to put that stop loss in the market. It's a rookie mistake, but it happens, And
it not only happens to rookies, as we just heard, it also happened to seasoned market veterans. And I actually had a friend who's a money manager who did this once. He opened a trade for a client of him. I think it was actually also euro-dollar, if I'm not mistaken. And then he went on a plane just for an hour flight. But the market went so strong against him that even after this 1 hour, the position had destroyed like 5 or 6% of account balance. And this led to the client saying, like, you know what? If you make mistakes like this, I'm going to withdraw my money from you. And just because he thought, I have to board my plane now, I have to turn off my mobile, I'll just, in an hour when I land, put in the stop loss. There's not much volatility at the moment anyway. Don't do that.
No, never. It's a really, really bad idea. I'm gonna put in a horizontal, because on the 5 minute, this looks like a good take profit. But what you see here is the let me adjust this one. Why is it not adjusting? I'm choosing all right. So the red line here, the red horizontal, that's a daily level. So basically what that means is if you go to the daily, you put on the line chart, it's this level right here. It's the daily level that we're testing right now. My TP is this right here, which if you look at the line chart, it makes no sense. It doesn't align with any daily level, so it makes very little sense on the daily. Now, what about so I can change this to TP to make it very, very clear. So, all right, it's not supposed to be green. I want it to be blue. Okay, blue. Now go to the 4 hour. Is this a good level in the 4 hour? Well, kinda, but what I'm a bit worried about right now is the TP area on the daily does not align with the daily level. Price is currently testing a daily resistance. On the 4 hour, price is testing the same level, and it's also very strong, like right here, it's a very strong area on the 4 hour as well. So we're basically running into resistance area here that's very strong on the 4 hour and the daily. And on the 1 hour, let's see. Now on the 1 hour, my TP target looks perfect, okay? Because now we're back in the 1 hour range. And you can see that these are the range highs. My TP is right here. So I'm kind of, I'm front running that high and I'm front running the overall range high. But this is also a problem. You're trading on the lower time frames, but you're looking at the higher time frames for some type of confirmation. So what levels should you be focused on? And this can be done from a discretionary approach, but the way you're trading based on discretion is based on what you know about the markets. So if you've seen, for example, that focusing on high time frame levels works best when trading lower time frames, well, that's what you're discretionary going to choose, if that makes sense. And I don't really have the data to back this up yet. So I'm a little bit conflicted. But what I'm going to do is I'm going to follow along with the plan, because this is not the time to change anything when it looks like this. But it's a valid concern.
Yeah, I think you have to, not you specifically, but one has to be careful also about not over-analyzing things. Because if you start looking into the next thing, first of all, you'll always find reasons to take the trade, and you'll find reasons not to take the trade, or to trick yourself into changing your take profit, into changing your stop loss, and so on and so forth. I'm quite happy that you just said, okay, I'm going to stick to my guns now. This is what I decided before. At this reasoning, I'm going to stick for it. I'm not going to fiddle with it for now. And let's see, you're not far away, like 3 pips now, no, from your take profit, I think. Let's go.
Yeah,
and then let's see.
So now,
let's see if like maybe in a half an hour, my reasoning actually for my trade is still valid, or if we are going to make a higher high than the previous week high, which would change the whole setting, in my opinion, most likely to more of a bullish setting again from arranging markets.
Yeah. So what I'm going to do now is my plan was, remember all along when that alert goes off that I had up here and price starts breaking out, I'm now going to look at moving my stop loss, because now we have this trend, and my idea is confirmed. I'm in the trade, I'm in the trend, so I'm just going to move my stop loss to here. Okay, so I'm basing the stop loss placement on this swing point. I want to have a wide stop loss. I'm putting it down here, basically lowering the overall risk of the trade. And if we get something like this, I'm going to move my stops to break even. So I'm manually trailing my stop up with every new swing point based on the trend that I'm trading. So you can see it's the same here. We can look at the swing points. We have 1, 2, 3, 4, 5. All of these are potentially new stop loss placement levels. And you can see if you trailed your stop up here, you would have been stopped out here, and that was the breakdown. That's what I'm going for. What's the name of that? It says William William something indicator.
That Williams or something, no?
I'm gonna look that up, because I've thought about Williams fractal.
Okay.
I thought about incorporating that, because it actually it's able to, well, it's again, this is an indicator that's not really needed, because visually you know exactly where the swing points are. So I think for a lot of people, like, indicators are really good if you want to develop a trading system with clear signals. Like, you have a very specific signal, like, oh, if price hits the 20 EMA and does this, you get a signal and you execute. But when you add the Williams fractal here, you can see on the 50-minute, for example, like, without adding the indicator, it's quite clear where the swing points are. So let's see if we can try to predict where the indicator is going to put the swing points. It's probably going to be here, 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 here. Like, it's quite obvious. Now, it's going to add more than this probably, but these are the major swing points that it should be adding. So now let's add the Williams fractal and see. Let's hope I'm right here. Otherwise, that would be embarrassing. Well, yeah, so you see, like, it's these and then many, many more. But the best ones are going to be these ones. So if you want to use an indicator like this one, make sure that you adjust the settings so that the swing points that you like visually are actually the ones that the indicators are showing you. But again, like, this is just another example of price action is king. Price action is king. Right now, Euro EU is king. Let's hope. I got low battery on my keyboard.
This is also kind of neat, you know. I saw some comments just now. I think it was about, like, patience again, or that, you know, the take profit gets hit almost, but not quite. This is also a game of patience right now. You know, if you're like 3 pips away from your take profit, and you kind of stare at the chart saying, like, come on, give me that last push up, you know, I don't care what happens after this anymore. This is also a point where a lot of people start messing up. And messing up here really means you are kind of messing with your long-term statistics. You're falsifying all the backtesting work you might have done before that.
Yeah, but, you know, if price comes up here and, like, gives me a clear rejection here, I'm just gonna market sell. There's no point of, like, if I get this structure up here, then I'll just exit the position, call it a day, and that's a 1-to-1 hour trade. But now this is way too early. This is way too early.
Yeah, of course, you also don't want a trade that is already at, let's say, 1.4 hour or something go into loss anymore. That's understandable.
Yeah, but this is at this point I'm at 1.67. So that, like, to make this a winner, the winner is too small for me to be profitable. So I'm thinking that I should have around 50% win rate. Actually, let me see if I can look that up, what my actual win rate is. I started trading on the lower time frames. And I can, of course, base it on that, but we have to. When did I start trade this? That was it the 11th? I'm gonna have to go into my journal and actually open up the lower time frames here. I can monitor that at the same time.
That's like an interesting question. Maybe why you look it up from Lost Trader just now at 3:38. starting with all due respect. Maybe you can highlight that one. I think that's
Which
a
one
very
do you
good
mean?
question. From Lost Trader. It starts with all due respect. Why don't you close your position, and so on and so forth. Just now at 3:38. Yeah, that one. It's off again. Here we go. With all due respect, why don't you close your position when it's close to take profit rather than waiting to hit take profit? I've seen people not close even if a trade is 2 to 5 pips away from the take profit. That's a good question in my opinion. So thank you for that first. Again, it boils down to statistic. This would be true if we are talking now about a swing trade, let's say that is aiming to capture 150 or 200 pips. Yeah, then we wouldn't have discussion. But we are right now talking about a scalping trade, which had what was the initial take profit target in pips? Something around 12 to 15 pips or something. Is that correct?
9
pips. So 9 pips. Even 2 pips, not talking about 5 pips even, but 9 pips in relation to 2 pips in relation to 9 pips, that way around. I mean, that's more than 20% of your whole take profit target already. That's a lot. That's why it's so important, in my opinion, on the lower time frame to really stick to your take profits. With the exception, of course, if you later like hundreds of a pip or something on there, okay, let's not talk about that. But that's 20% to 50%, even in this example, more than that, 60% of the whole move you're trying to capture there. So, and this long term absolutely makes the difference. That's why it's so important, because again, you're messing up your risk reward ratio.
Yes, I looked at my win rate since the 11th or 12th last month when I started with this, and I was trading other pairs than EURUSD, but my win rate is 56%, but not profitable, so around break even. So the important, and I think the fact that win rate is good, 56%. The reason why I'm not profitable is because a lot of the trades that I did move my stop to entry, they got hit and then it moved to TP. So in backtesting, I had the same win rate around. So in backtesting, around 65%, which translates to 50 in live trading, because I've seen that my backtesting win rate is like 15% more than live trading, which kind of makes sense because it makes sense because there's so much more going on live trading. So what happened is like a lot of the winners, a lot of the trades that should have been winners is actually break-even trades, and therefore the overall winners are smaller, which one of the reasons why I can't exit here, because I need to have that. I need to have above 1R. So with a 56% win rate and above 1R, I'm profitable, because 1R on average with 50% win rate is break even. So 50% win rate and above 1R puts me in profit, and with 56% win rate and above 1R puts me even more in profit. We have to look at Bitcoin, because Bitcoin is
breaking 66,000.
Yeah, holy
wow.
Shit. I mean, look at look at the weekly here. This is absolutely insane. So yeah, we're breaking out. This is the weekly resistance. We're now we can look at this area on the daily. Let's see. Yeah,
guys, have a look later on really at how the net inflows in the Bitcoin spot ETF were today. I bet based on what I saw in terms of price movement today, there must be quite high net inflows again. If that is not the case, then we are entering the state of FOMO.
Yeah, I'm gonna enter the link to the website here where you can look at the Bitcoin ETF flows.
Should be updated someone tonight or tomorrow morning or something.
Let's see how that looks. Okay, so Bitcoin is, oh good God, this is absolutely amazing.
It's bonkers. It's really bonkers.
Well, like if Bitcoin breaks into all-time high, we need to do like a special giveaway. I don't know like what type of giveaway, but something. We need to do something. I definitely need to talk to.
I'm going to throw something in then. If we see an all-time high while we are still here for the next 20 minutes, I don't know. I'm going to.
Yeah, all right. So if we break out in the next 20 minutes, I'll.
We do the next live stream naked or whatever.
Yeah, right. We'll do the next live stream naked. We'll be dancing naked. We'll We
That would
might
mean
have
either
to.
0 views or 1 million views, probably.
Dude, I'll open. Dude, if Bitcoin breaks into if Bitcoin breaks 69,000 now, I swear to God, I'll open an OnlyFans for all of you.
I mean, exactly. Such a naughty number for an all-time high. Anyway.
Yes, it's amazing. Last all-time high, $69,000. All right, let's. Marketing team is going to kill me here, so let's talk about something else. Yeah. Okay. So now. Yeah, this trade is looking good. I'm gonna move the stops up here based on the 5 minute time frame. 5 minutes, so it's gonna be below. Where did I say? I was gonna put it down there. So at those lows here. So
That's a bit choppy,
now,
the structure that we had for the
Yep.
very close together, like within 5 or 10 minutes, for a new high and
Yep.
new low.
But yeah, this is. I like it. Now, if this is gonna stop me out, that would suck, obviously. But I'm probably gonna. You know what? Like if it comes all the way down here and goes down here, maybe you know what? No, I'm gonna leave it. I'm gonna leave it. I know I need to leave it. I'm actually in a position on Link. I'm gonna see what Link does. Chain Link. I think it looks good. Yeah. Looks all right.
Wow.
Good. But altcoins are moving very slowly as compared to Bitcoin. Let's see what
that's a couple of days after Bitcoin. Again, we're going to see altcoins moving. That's what we always have. Beginning of a bull market, first phase of a bull market, you have Bitcoin, and then things slowly shift into altcoins.
Yeah, it's amazing. Let's go through a couple of questions before we do the actual giveaway. Okay,
break
so
70K, give 10 accounts.
As a beginner, I'm only focused on one pair. My setup don't give me daily entry. Sometimes I get frustrated when I don't get entry. So backtest, just backtest. That's it. If you like. Backtest gold, whatever you're doing on gold, you go back and you backtest that. If you see that you're super profitable, only taking 2 trades a week, then you should be able to wait for that, right? You should be able to wait that. And when you're not finding any setups, go back and look at that backtesting data, because that backtesting data will give you the confidence needed to wait for the best trades, right? That's what I do. If I start to lose confidence in my system, I backtest and I see that, wait a minute, my system is really great. I'm very, very profitable unless I start taking stupid trades that I'm not supposed to be taking. So remember this, guys. Like everyone who's watching this, you're not going to make more money the more you trade. You're going to make a lot of money if you trade the right number of trades that your system and that market is available, to offer you. So your job as a trader is basically to sit back, look at price action, relax, and wait for the market to tell you to enter. It's not about you, forcing an entry. It's about you waiting for the market to kind of give you hints on where and when to enter. Over trading is like, people don't realize it, but over trading is the number one reason why new traders fail, and experienced traders as well. You will see experienced traders make a lot of money, and then all of a sudden they're like have a day where they take 200% more trades than what they should do, and they blew accounts that way. It's just they go on tail, they start revenge trading, and they start over trading. So yeah.
But I have to congratulate you that you are only focusing on one pair, though. That's actually what Jonathan and I said also last week. Hey, when we want to get more into the lower time frame, maybe we should focus on one pair. And once we are confident with this one, we are going to move or add additional pairs. Let's see. Because you don't want to miss anything and you want to nail your analysis. So that's actually something good you are saying there. And yeah, I get it. All these apps by brokers nowadays, they are so much tuned or design in a way of gamification. I think they call this as a marketing slogan. So they kind of encourage you to take a lot of trades because maybe you get a badge then, or it's designed in a colorful way. But you shouldn't take so many trades. You want to take the trades that matter. And if that is one trade a day or even just one trade a week, well, then it is like this, because you have to remember, especially on the lower time frames, every time you take a trade, you take a risk, you are on the losing side because you've gone through the spread. Maybe if the spread is zero, like at the 5ers it is very often with a liquid pairs, you still pay this commission per lot, which is, I think, $4 per one lot. It's also very low, but you pay this when entering the trade. Oh no, it's $4 round turn, so it's $2 upon entry, $2 when exiting the trade actually. But still, this is something you need to earn first again. So don't get frustrated. Focus really on what Jonathan just said. For him, it's backtesting that helps. Then find out whatever's helping you, that you can stick to your guns.
Very good, very good. I'm going to try to go through all the questions we have here. And after that, we'll go. We'll start the actual giveaway. I want to make sure that I go through all your questions here. So we'll begin with the oldest one. Often trapped in ranging markets, even though I have gotten the big picture of big trend. And I think here what you're doing is probably overanalyzing the markets. If you have a plan, if you're looking at the higher time frames, the bigger picture, and you have a plan, and you know where market might be heading based on the higher time frames, you're probably overanalyzing. Ignore all ranges. When I'm swing trading, I don't care about ranges. I want to look at trends. If there's a range, I move on to the next pair. All right, next one.
Pretty much nailed it, yeah.
Yeah. Will the 5ers also stop using MetaTrader? No, we will not stop using MetaTrader. We will not. So how many indicators do you use? How many time frame do you try to trade before you have success, and how long time are you trading? I've been trading for 7 years. Well, 7 years. I started in, I guess I started trading 7 years ago. But when we start out the first year, we're basically as glorified gamblers. So I don't know what to call that. I would say I've been trading seriously. All right, so now I gotta look at Euro USD here because I'm
just about to say you almost went.
Yeah. Whoa!
Yeah. Nice.
What a good way to end the live stream here. Beautiful.
Congratulations.
Nice one.
Now let's see if we overcome the last hourly tops here. There's a good chance that my stop loss is also getting hit.
Your stop loss? Yeah, baby. Your stop loss is my TP. That's the way it goes.
No. That's still higher. I still have more pain to go through.
That's the beauty of trading. We can. That's the beauty of trading. We can. And now I'm like, oh man, I'm dreaming about that Lambo. I'm looking at Euro USD, it's breaking out. Tomorrow it's going to be 100 pips higher, and I'm going to be crying. It is what it is. Yeah, let's hope it's not going to hit your stop loss, and then it's going to go straight to your TP.
It's okay, this is part of the game.
Okay, so how many time frames have I tried before? Every time frame, every time frame.
I think how many times it said until it's successful.
Oh, how many times? Oh. Wow. I recall one situation when I started out. I think I've been trading for 1 year, so this is 2018. Maybe 1 year into trading, and it was so frustrating, so extremely frustrating. I spent the last 6 months learning TA. Look at Euro USD go. This is in backtesting. I would have put TP up here and see I'm looking at the difference between that one and that one. What am I going to be more profitable with this as TP or that one? And right now it's actually this one is more profitable. Most of the trades hit the last local high. Interesting observation. It's interesting that taking 1 hour trades is more profitable than taking 2 hour trades. Anyway,
I think the higher you go on the time frame, the more that shifts to the more beneficial are trades?
Well, in swing trading, that's not true. That's actually not true. Especially not with my swing trading. I tested like 2 years of trades, and it showed that TP1 taking fully profit at TP1, it was way more profitable.
Okay.
Actually, so I think it's depends on the system. Anyway, so a story. So 2018, I've been doing TA for 6 months, right? And I start to learn the basics, right? The break and retest, rounded retest, all of that, right? And I remember like I was just losing money, not being profitable. I was so frustrating, so extremely frustrating. I remember saying to my girlfriend at the time, she's not my fiance, probably my wife, hopefully this soon. I told her, like, I'm going to take 100 trades. And if I'm not profitable in the next 100 trades, I'll give up. Okay, it's not worth it. I've spent 1 year. I'm not making any money. And in the next 100 trades, if I can't figure out a way to make money, I'm better off I'm better off studying and becoming, advancing in the job that I had at the time. And I said that, and I put a goal, of 100 trades, and I was actually profitable during that period. And I think that was what I needed, to put a deadline and really say, you know what, you can't be wasting 1 more year on this without seeing any progress. Because imagine if you're studying to become a doctor or a lawyer, and you're like, you're 2 years in and you don't even know anything about being a lawyer or a doctor. Well, that's probably should move on to another field, right? So,
sorry, I just had to think about being a doctor. So the equivalent when being a doctor with crashing your account is that your patients all die all the time.
Oh wow, that's dark. Yeah,
that's
so
really
like
dark.
if none of my next 100 patients lives, I'll give up.
I'll just give up.
Yeah, you're probably going to be in jail before that happens. Yeah. No, so I've how many times have I tried to become successful? A lot of times. I've lost count. It's been so many times. I've been beat down by the market so many times, and I'm still here. That's what trading is: resilience. You gotta be able to go into the boxing match, the ring that is the market, and get your ass beaten time after time after time, get knocked out, and get up and get back into the fight every single time. If you can't do that, trading's not for you. This is extremely brutal, because you're basically your own teacher, your own master. You're responsible for everything that happens in the market. If you wait a minute, I can't hear you anything. My headphones disconnected. Oh man, I'm getting so excited about this trade. I'm gonna start destroying things. All right, now I can hear you. But yeah, tried it a lot of times. All right, next question. How to successfully swing trade? Oh, that's how to successfully swing trade. Focus on the higher time frames. Look at the trend on the daily. If you're in an uptrend on a daily, only take long trades. By like the first retest of a support. So for me, that would be break and retest, buy the first retest of that previous resistance area, and trade it up to the next local high of that trend, and always trade with the trend. I think that, in a nutshell, for me, is what successful swing trading looks like. But then you might be a range trader and you might have a completely different strategy than mine. And
but I think focusing on the higher time frames for beginning is the way to go.
Pick a strategy, be consistent.
I think you still can't hear us, right?
Okay, I can't hear you probably. Okay. But go ahead, talk.
No, I just said I focus on the higher time frames. That's a good strategy. This is actually how I got successful as well. When I cut through the BS, of trying to be immediately successful with 1 minute, with 5 minutes, and so on and so forth. Once I left all of this behind me and focused on what I'm good at, which is normally analyzing macro. I'm good at reading macro information, digesting this, and formulating a hypothesis out of this, and then sticking to this hypothesis until it's disproven. And this is what I'm good at. And you see the trouble I'm going through now as well. I'm struggling as much as you guys probably also on the lower time frames, trying to find my alpha there. The only difference maybe is that I know how to deal with this psychologically. But yeah, this is what we go through, everybody. And you got to find your own way, in a sense. Don't copy a trading system, for example. I think we have to come to an end also slowly, no? It's almost 4 p.m. already.
Yep, definitely. Last question. What the stochastic RSI do you use? Style, I go to upper band is 30, lower band is, no, upper band is 70, lower band is 30, and then I remove the background. That's basically it. And well, actually, the way I'm trading now, I'm not focused too much on the stochastic RSI. I kind of use it in a more discretionary sense. I'm never going to go long if price if stochastic RSI is above 70, but when the trade is kind of confirming and bouncing, I want that to happen when stochastics is down here, as you can see right there.
The more Jonathan talks, the higher Bitcoin goes. Don't stop talking.
Oh, okay, 66. Now, how far are we from all-time high? We are, well, the high of today, 3.65. Amazing. Amazing. We're basically at all-time high. That's amazing. Okay, so let's open up the giveaway. Thank you, DIRK, for staying with us for this long. It's been 2 hours, and you're still here.
It's been fun as always, no?
It's been great.
It's been fun losing money.
Yeah, man. Yeah, like I said, your stop loss is my TP. That's
okay.
how it is sometimes.
I'm not sour at all about it. No, just kidding.
Okay, so let's see. We got that one. So what do you guys want the secret word to be? Just give me something. I mean, the first one that gives the best word. I'll go with that one. Give me something good. Give me something good in the chat. Come on, guys. Go. Okay, I like that. Let's go with that. Let's go with that. Magic word is BTC 100K in one word, so it has to be capital letters. Capital letters, BTC 100K. My TP or stop loss, that would have been a good one as well. TP,
that would have been a nice one too. That is like the ultimate chat move and chat thing in trading to say, hey, you know how it is, my take profit is your stop loss. Bang.
Yeah.
Good luck to everybody today. How many? It's not yet determined.
I don't know how many likes we have. Let's see. Let's see, how many do we have? We have right now, well, let's go and see. This is the live right now. We are at 881, so that's going to be three accounts. 3 accounts.
Oh, you guys move it to 1,000.
Yeah, if you like. We're at 8 right now. We're at 3 accounts. If you like the video 100 times in the next like 5 minutes, then we'll be giving away 1 extra account. So right now we're at 908. So that's about 93, 92 likes left in the next couple of minutes. And if you can manage to get that to 1,000, we will give away an extra account. Now, the way this works, I'm gonna add. The scrolling text below here, I'm going to be adding, it says alex@the5ers.com. And the way this is going to work is I will press draw in a couple of minutes. And when you see your name, immediately when you see your name, you will send an email to alex@the5ers.com with a screenshot of your YouTube profile where you see not the public one, but the actual one where you have to go in and look at your YouTube settings and all of that. Take a screenshot of that, send it to alex@the5ers.com, and use a real email. Like use the proper use your own email. So you have to send this email from the email that you're going to use to sign up to the actual account. Because a lot of these new accounts have been flagged by risk management because it's like some random fake emails. And obviously we have a lot of people watching this stream. We have a lot of people wanting these giveaways, and giving away this stuff is obviously means also we have scammers trying to grab trying to grab the accounts before the winners. So if you actually win the account, you have to send the email immediately, because after, I'm not sure what rules we set last time, but I think it was you only have like a couple of hours until the opportunity is gone. So we have to set a limit, because if you're commenting, you're watching, and if you're watching, there's no reason not to send the email right away. So a good idea would be to have your email platform open and have the email ready in the subject line and everything. Have that ready, alex@the5ers.com, and as soon as you can, you send that email away with a screenshot of your YouTube profile. So we're right now at 976 likes. So I think we're gonna give it a couple of minutes left so we can get that extra account. We only need about 20 likes left.
That is take profit in terms of almost reach, guys.
Yeah. The good thing here is this is there's no stop loss on this. This is always free trades.
That's
always
nice.
Free position. This is interesting.
Yeah.
Very interesting. Look at that. This looks
quite,
very,
I mean,
very
it fits the overall mood of the market right now, since New York is coming in. No, yeah, it's like a quite decent Bitcoin at 66,000, quite decent risk
Amazing.
on move.
So yeah, I mean, this is I mean, the market is full on risk on, and it's interesting to see that. Do you remember? Let's see. We got it was on this one where we had I remember way back we looked at the S&P 500, and do you remember this?
We got 1,000 likes, by the way.
Nice. You remember this? We had a live stream in 2022, I believe, where we talked about how the S&P 500 might be breaking market structure here and start breaking out. It's amazing.
Yeah, but it was at the time back then where I said, come on, inflation is coming down. Historically speaking, this is the time to buy crypto. This is the time to buy stocks. I just on Twitter last week, not to sound arrogant, I actually reshared my tweet from back then where I said, buy stocks, buy Bitcoin. Nobody cares about what I tweeted anyway.
Guys, if you want more very good non-investment advice, you should follow DIRK. He's on Twitter and YouTube. You can find all the links in the description below. With that said, I'm going to press draw. Good luck, everyone.
Good luck,
Fingers
everybody.
crossed. Let's go. Nice. Good one. I'm going to copy that. I'm going to send it over to Alex.
Congratulations, AJF.
Congrats. We got the next one. CCC777.
Congratulations.
Yep. Awesome. So that's the second one. Guys, you get these challenges. Don't go crazy. All right, risk small. Don't go crazy. If you get funded, take a break. Yuri.
Congratulations,
Congrats, man. I can see it in his eye. He's going to become a funded trader.
I think
Definitely.
So too.
Definitely.
And if you become one, you come here and
oh yeah,
join us or join Jonathan and Alex on the live streams.
Yeah, that would be really, really, really awesome to see. I think we do have some people actually who got through they got the accounts and they did go through. Congratulations, Tim Kim. That's the last of the 4 accounts. I would like to thank you all today for joining this wonderful live stream today, and I would like to thank DIRK for coming on and talking about trading. Oh, look at that rejection! This is
so next week when I'm back, then we are at 70K, right, or 75K?
probably. I mean, if we, I mean, should definitely have you on next week, and I want to maybe next time we should really talk about the long-term strategy for exiting, because it's now's the time to talk about exiting, because
that is interesting.
Because the time to enter Bitcoin is long gone.
I've been thinking about this long and hard also, and kind of have come up also with my exiting strategy already.
Yeah. All right, guys. Thank you all for joining. Now, tomorrow we are joined by Paul Scott, who is a former institutional trader. He is one of those guys that have traded huge amounts, and he's basically one of those market makers who steals your stop losses. So it's going to be interesting to hear his journey. So you know that's
We're going to quote you on that tomorrow. You should start the stream like this. So you are one of those guys who steals my stop losses.
Yeah, exactly. But are you the one who takes my stop loss all the time and then prices reverses? Like, yeah, I'm the one. Yeah, no, but join tomorrow. Very, very good session tomorrow by going to talk about the institutional trader. He's going to show you guys how the banks actually trade, and the banks do not use stochastics RSI. They do not use RSI. They might be looking at fib levels. That's something maybe they do, but usually they look at key levels, price action key levels, and he's going to talk about how that works. All right, thank you all for joining. Take care and see you guys in the next one.
Take care. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other